If you are looking to buy a house this year, if you are looking to get pre-approved, you're probably watching mortgage news and real estate news. Did you see this today? Biden rule to increase fees for high credit scores. What in the world are they doing now? Are they making it even harder and more expensive to get loans? Stay tuned. I'm going to give you the truth. Residential mortgage broker, licensed in 47 states, soon to be 48. Nevada, coming soon. If you want to connect me and my team, go to greatmortgagebroker.com. If you want to connect with an agent in your area, no matter where you're at in the country, homeandmoney.com/Matt. If you're in California, I probably got a personal referral for you, but if you're anywhere else in the country, homeandmoney.com/Matt. Greatmortgagebroker.com to connect me and my team. So this article has gotten a lot of circulation. It's generated a lot of questions. I've personally got emails, texts. Matt, what is going on? What is this Biden rule? Increasing fees for high credit scores? I'm going to be penalized with a higher credit score? I'm going to have to pay a higher fee? Let's start with just this screenshot we're looking at. New mortgage fee structure. The 620 FICO score gets a 1.75% fee discount. The 740 FICO score pays a 1% fee. On the surface, people are getting penalized for having higher credit scores. What is this? Now, let's go back. We don't have to go back that far to when we talked about loan level price adjustments back in May. Back in March or even sooner. We talked about this, that starting May 1st, 2023, Fannie and Freddie, there was like a heat map that showed how rates were going to change based on down payment, based on credit score, and how some lower credit scores and lower down payments were getting an adjustment, a little improvement, while others were getting worse. That's what this is. It's a really weird way to say it. It's a really weird way to spin it, but that's all this is. And I'll tell you a couple things. First, it's already been implemented into the rate sheets. If you're currently shopping, if you're in contract, if you've got a loan right now, nothing has changed for you. All of these loan level price adjustments have long since been baked into lenders' rate sheets for months now. So nothing is going to change. But let me just show you and try to say it in as simple as terms as I can, because I've had this conversation a few times today. And even as I say it, sometimes it comes out a little bit confusing. So when they say that things got better for Mr. 640 and things got worse for Mr. 740, what does that mean? Let me just go over on this sheet and we'll look at 85 to 90%. This is loan to value across the top. And we'll go down a couple cells where it says 0.75 on the 740 credit score. And then if you go down to the sub 639 at the bottom, that's the 620 that was mentioned in the article, it's 2.625. And so let me start by saying this. 2.625, and that's 265 basis points. It's not actual rate. That's the loan level price adjustment or extra cost or worsening to the rate, however you want to look at it. Let's just call it higher cost for being more risk, for having a 620 credit score. And then you've got a 740 and it's 0.75. It's less risk, so less cost. Now, what changed from the past to now is that it used to be even wider gap, where maybe at the 740, this was a 1% in incentive. This was a negative number. And down here, maybe it was 3.75. So it got a little bit better for the 620, got a little bit worse for the 740. But that doesn't mean that it's cheaper to get a loan when you have a lower credit score. Hopefully that makes sense. That's the point I really want to drive home. When you go to this article, or just this headline, it looks like you pay a fee at 740 and you get a discount at 620. It looks like 620 you are better off than 740. Not the truth. You're a little bit better than you used to be at 620, but you're still paying a premium to borrow money because it's higher risk, according to lenders, if you've got a 620 score. If you've got a 740, you're paying a little bit more than you were in the past. You still get a discount versus every other lower credit score. As you can see, 0.25, 0.5, 0.75, 1%, 1.25, 1.5. It gets more expensive the lower you go on this matrix as far as credit score goes. The only change is that it got better for lower credit scores and worse for higher credit scores. This spread between the two shrunk, right? And so it's going to provide some more access, make it a little bit easier for lower credit scores. Let me see if I can find that lender letter. Fannie, loan level price adjustments. Okay, this is the latest lender. Actually, the things changing, but and even debt to income ratio is going to come into play, where you're going to get different pricing based on your debt to income ratio being higher or lower than 40%. So here's that lender letter. There was another one earlier in the year. This one came out just to let everybody know, about the changes. But there's a matrix based on different loan types. There's a purchase one. That's the one we looked at. There's adjustments. If it's an adjustable rate mortgage, a condo, an investment property, second home, all that good stuff. Cash out refinances. And so that's that. In summary, the news, which we know, like most things, just trying to get clicks, it's really a nothing burger. This is a nothing story. Nothing is different than what we knew end of last year when the initial letter came out explaining the change. And if you go back on my channel, I've got the heat map where it shows worse here, better here. That's what happened with that whole loan level price adjustment kind of grid or chart. Hopefully that clarifies it. Let me know in the comments if you have any questions. Let me know if you're worse off than when you started. Let me know if this makes sense. But long story short, you see headlines, you see news articles. Everybody's got an agenda. The agenda here was, I don't know, point fingers at certain folks and say that they're doing folks wrong. Fannie Freddie had this implemented long ago. Nothing burger. That's that.